family. Oh, family. Do you see the giant red candle that's going into my head? That is today. Mortgage bond action lost 64 basis points. One of these days, I'm going to make a video where I actually go crazy and I lose my mind. And it's going to happen live. So subscribe now or you'll miss out. Wow. I locked a loan for a gentleman today, buying a brand new home. The lender at the new home builder quoted him 4%. And we were at 3.375. And we'd been talking, he's been pre-approved since as a VA loan. Rates were in the twos. The low twos for him. And we locked today, 90-day lock. 90-day lock, 3.375. And the builder was at 4%. And he said, I might have to get a second job. I said, me too, man. Oh, may as well laugh about it, right? May as well laugh about it. We're going to go through some stuff today. I'll give you a little bit of analysis on the rates dropping. Here, this is mortgage rates stabbing me in the head. Have fun with that. Just stab me in the head. Stab me. Stab me in the head. Derrick Evans, VA Home Loan Specialist, NMLS 155010. Give me a call or text, email if you want to buy or refi. All right. Got a few things to cover today. I'm going to touch on Bitcoin too. I got some really interesting stuff to share with you regarding that. We'll just look at a couple of things today. It's in the news now. Remember what I was talking about was once you start to see this in the news. So today I'm going to reiterate a bunch of stuff I've been telling you is going to happen. It's happening. And this is I have no business doing any victory laps here. I'll victory lap Bitcoin in a second. But let's look at this. So people are starting to see this. People are starting to experience it. People are reaching out to me going, hey, I know rates went up. What would my rate be today? So they already know. So that will cause a spike in demand as people go, I want to get in before rates go any higher. We've waited too long, honey. Let's go. Get it. We lost out on a property. We offered 10% over. Contingencies were all gone. No appraisal. And somebody paid $100,000 over that. It's just, that's what's going to happen right now. That's this part of the season is you're going to see mania because everyone knows rates are going up and they want to get in before that. Home builder confidence dropping. This is tough because our inventory is coming from where right now? We need home builders to be at it. We need home builders to be working around the clock 7 days a week building homes. That's what we need. And all we have is just roadblocks. You have legislation, you have different conservation issues, you have all sorts of different just red tape, and then inflation, material issues, labor issues. Gosh, just never ends. Home builders making great money on all the homes that they can build. Good luck building a home. I thought this was nice. I just put this in there. Chance in COVID 2020, 2022. Everybody's hoping for that. All right, let's take a look at this. Let me show you this before we dive into the mortgage bond chart, which really is just a great big dive into the pool itself. So here's what I've been telling you this for a few days now, actually a few weeks, if we really go back. Remember when we were eking out highs and one day it was the Dow and one day it was the NASDAQ, all-time highs. And then one day it was the S&P. And I was telling you, this is a setup. This is a psyop. They want you to think that this is the place to put your money. They're knocking down crypto and they're giving you crypto headlines. Oh, Bitcoin down huge, crypto getting murdered, new all-time high in the Dow. This is what happens when big, smart money transfers from one to another, from one asset class to another. I don't think anyone here follows me on Twitter, but I've been tweeting a bunch of stuff like this. So what do we have today? Particularly Bitcoin. Now, it's hard. The fingerprints, can you imagine being in the room of market makers deciding, hey, we're rotating capital from here to here? how do we disguise the carpet pull as much as possible? And, I have it figured out. I know exactly what's going on. That's why I'm trying to explain it to you, because I've seen this before. Now you're seeing the real selling is coming in and people are liquidating. Where's the money going? Well, I can tell you one thing. Bitcoin somehow today, and this isn't crypto in general, this is just Bitcoin and Bitcoin Cash. Bitcoin and Bitcoin Cash, green. Pretty much everything else red. I don't have too many other cryptos that are in the green. Let's pull that up real quick. Coin market cap. Let's see if there's a whole lot of others. I haven't looked at this. Let's find out together. A lot of it's red. I mean, this is today right here, last 24 hours. This is actually showing Bitcoin as red. It just depends on what exchange you're looking at. There's different prices, different exchanges. This exchange up here, for example, 42,306. This one here is 42,220, and then here is 42,300. So it's barely up, okay, but it's green. Now, I've been explaining that you're going to see, I believe my prediction is you're going to see rotation out of equities. A lot of the story behind why stocks are going higher, the growth and everything, it's attached to inflation. Inflation is about to get nipped in the bud, and or at least that's what the Federal Reserve is supposedly going to be doing, raising rates a whole bunch. That's always bad for stocks too, by the way. Remember, cutting of rates is good. Loosening of the market, flooding of the market with money is good for stocks. Peeling it back is bad. The carpet pull has not even really begun yet. This is where we're at. 10-year yield rises to a 2-year high. 187, rates up. Shoot, you're almost getting even money on your German bond here. The Bund. 0.003 negative. You still got to pay him for it. That's gone up so much it's almost at zero. And then look at oil. Continuing to run. I got out. I did. I got out early. I'd rather get out early than too late. Oil was telling a story there for a minute, and I got out of my oil trade. Made a nice profit though. Gold's still around 1,800. Look at Bitcoin. Holding on. All right. Last thing I'm going to say about this. This is what I'm watching. See that blue line down there? That's it. Let me get rid of this Fibonacci. Can I get rid of this Fibonacci? Bye-bye. Okay. This is Bitcoin. I'm looking at this blue line. What is that blue line? Well, this is what's going on right now. We have an ascending wedge. And this is on the weekly chart. And if it plays out, this is what we can kind of expect. Something like this. And so we've been seeing sideways movement right here. Okay. And I'm watching that trend line. That's the key right here. I touched it once. You stay above that. It's game on. And you can see when you zoom this out. This is a 1 hour chart. Hold on. Sorry, it's been a crazy day. This is probably one of the top 10 craziest days in 22 years I've seen for real estate and mortgage. Just from the very beginning of the bell, and rates just getting worse all day long, trying to lock in loans. Systems were frozen. Just crazy. So that's, if you really zoom out on Bitcoin, that's what it is right there. And you've got this uptrend that is essentially a rising wedge. And so if it plays out and it's holding right here, it looks like such a bear trap. It really does. It looks like a bear trap. I could be wrong. Bitcoin could go to zero tomorrow. Who knows? Anything could happen. But it sure does look like a bear trap to me. So I expect a big candle, a big green candle in Bitcoin here soon. All right. That's just my opinion. Back to mortgage rates, or what we also call death by red candle, a.k.a. the falling knife, a.k.a. the never-ending pain. So we got 2 days of just light reprieve before the selling started really picking back up again. And my question is, where's the Federal Reserve here? I mean, are they bidding on this? Are they putting in bids? Are they buying any of this? Like, it would be shocking to me to find out that the Federal Reserve was putting in billions into these red candles, and we're still getting this action. That would be crazy to me. It seems like they've left the building already. It's what it looks like. That's not what we were told. That's not what we were expecting. It's what it looks like, though. So I hope they are in their bidding. They're supposed to be. As you can see here, we see this acceleration in the decline, which continued. Then it finally got a break, and now it's just like falling knife. So remember, bond prices go down. That means that rates go what? Up. And so we want to see bond prices go higher. But I've been saying for months, who would buy a bond besides the Federal Reserve? It's a terrible investment. Even with inflation at the 7% number, even if you believe the government that that's all it is, why would you buy this and make 3%? Why would you buy this bond for a 3% yield? Guarantee yourself a loss of 4% and have risk. Guarantee yourself a loss and have risk. I'll take my chances on my mattress. I'll take my chances at in-home safe. Or a safe deposit box. I mean, a savings account is better than losing 4% and with risk. So this is just kind of the situation that we're in. Now, most money has been pushed into the stock market, that by far. Remember, the bond market is enormous. It's enormous. It is the biggest market. It's bigger than the stock market and crypto markets combined times 10. It's way bigger. And all of a sudden, imagine, all of a sudden, you have all of these assets, all of these pieces of paper that are effectively worthless. I mean, is it worthless to you if you lose money with it, guaranteed, and have risk of losing your entire principal? You know what I mean? So that's why no one's stepping in to buy these things. There's no hero is coming. The hero is leaving. So we don't have good news on the rate front. This is going to get worse before it gets better. It's going to get worse before it gets better. I do think long-term locks make sense right now. I've got 2 long-term locks. I did a 75-day lock today and did a 90-day lock today. So I do think long-term locks make sense here, especially if you're in the broker space like I am. Loan officers should be nervous right now. You really should. This is about to become dog eat dog. And we are in a competitive industry already, but it is about to get crazy. Let's see what companies are smart enough to get high and tight right here, and which ones are going to absolutely just blow their wads on whatever marketing, throw money at a whole bunch of stuff. There's all kinds of people who are going to. All kinds of companies are going to go out of business, and mostly because refis just become a lot less attractive. You're just not going to see like quantity of refis. That's not going to be there. Purchases are so hard because the inventory situation is so bad. I can just tell you right now, you're going to see a lot of mortgage companies shut their doors. You're going to see loan officers exit the business. That's all coming, regardless of the fact that real estate prices are going to keep going higher. All that's going to do is just exacerbate the problem, and we have years more of that coming. Years more of that is on the way. For people who don't understand the demand buildup that we have, I could have probably put this up here. Let me go ahead and just drag this guy in. We have 5, let's see, 1, 2, 3, 4, 5, 6. We have 6 years in a row from now. So the next 6 years, why do we look at 33-year-olds? It's the average first-time home buyer age. Okay. 6 years in a row from now, guaranteed, starting this year, where we're going to have more people in that demographic than the previous year, or than we do today, let's say. Than we do today. And you can already see what's going on. This has been ramping up for quite some time. This is when we crashed. Okay, the crash is right here. We crashed when this figure went down. Look at the ramp up that's going on right now. Now, if you add on top of that the fact that there are way less homes for sale, we have 12 million more households today than we did before the crash. And we have millions of less homes for sale. Millions less. Several million less homes. I don't even think there's a million homes for sale right now in the whole country. I think it just went under a million for the first time in a very long time. And I'm gonna get a bunch of these stats. I had to kind of make this video quick today. I gotta go. I got a bunch of stuff to do, but I had to make something today and tell you what's going on because it's pretty ugly, And the word is out. Buyers now know. Okay, they're starting to see stuff like this, and it's best to be as educating as possible. I did get a good lock in today, early on in the day before things got too nutty. Only an eighth higher than we previously quoted the buyers. That was a huge win because, throughout the day, it was just falling, reprice. And it's going to be a tough time. These companies now, mortgage companies, are going to have to be high and tight. These loose operations out there, these companies that spend a bunch of money and kind of high-flying, fast-moving, cowboy and Indian style, business people, they're going to get smoked. They're going to get smoked. Promise you. Now's the time to be smart, people. Now's the time to be smart. And pay attention to some of these correlations. Watch out. Watch out for equities. Now, every time, tomorrow is going to be important because, today, right, we lost 200 points in the Dow Friday. It was going into a 3-day weekend, and I think the S&P and the NASDAQ were relatively flat. Today, we come back from a 3-day weekend. Boom, everybody's pushing the sell button. What did it look like tomorrow? Because stocks have done nothing but rally after big days, down days like today, have done nothing but rally. But something's different now. The rate hikes, they're right around the corner, and everybody knows it. So our fund manager is going to go and push the buy button on stocks, or are they going to find something sexier to invest in? I will say this about cryptocurrencies. Probably 90% of them will fail. One of the reasons why I like Bitcoin. Bitcoin ain't failing. But a lot of them are going to. When you read the thesis behind them, they all kind of have a very similar objective. Now, that doesn't mean that, you can't have multiple of them that survive. There's lots of different restaurants. They all have the same objective for the most part, right? There's lots of different cars, different types of cars. They all have the same objective relatively. So there's room for more than just one. Everyone who says, it's either Bitcoin or a shitcoin, that's not true. There's other coins that are good, that are going to work. Cardano, by far, top 5 crypto, by far the most underrated. By far. That one has a lot of legs. But when you listen to Mr. Wonderful, okay, if you remember that guy from the Shark Tank, if you listen to him talk about investments and upside and where the best investment opportunities are, he sees it pretty much cryptocurrency. Mark Cuban, in fact, also a Shark Tank guy, recently said 80% of his non-Shark Tank investments are in crypto. These are market movers. These are the guys who get in early. These are the people who get rich off of investments. They know what it looks like to invest in something early. I believe that Wall Street is catching on to that. And that's where my thesis is. Tomorrow, we'll see how it looks. I'm going to wear a green shirt tomorrow. I don't think it's going to make any difference. But somebody, please stop the pain. Please stop the pain. We need rates to slow down here a little bit. We need them to slow down. We can't just have a straight free fall. We don't want to see rates go up 1.5%, 2% in a short period of time. That would cause problems. So that's the one thing that we've been looking at, that we're tracking, that we don't want to see from the interest rate market, that could tell us what might happen next. It could tell us when you might see a real slowdown in buyer activity. If rates rise too quickly, too much too quickly, that could do it. That could cause the market to really pause for a second. We need the market to pause for a little while in order to get more inventory. Right now, sellers are getting paid to wait. Imagine if you were a seller, you wanted to sell your home 2 years ago, and you said, you know what, let's wait a few months. You got paid a lot to wait, didn't you? Every year you're getting paid fat to wait. You got paid 20% last year to wait. So there's a lack of motivation there. There's a lack of urgency. Now, if we see, buyer demand dwindled because of rising interest rates, property values flat, or heaven forbid, property values in San Diego down for the first quarter in 39 quarters, or however many it is. If you start to see those kinds of headlines, that would get that seller who's been waiting to go, you know what? I think we finally waited it out to the top. Let's list the home. And there's where your inventory comes from. But you need the market to slow down for a while first. This demand that we have coming, the only thing that could stop that would be very quickly rising interest rates. And so that's why I'm watching that. That's why I'm tracking that. That's why I'm really begging for this to stop. Not just because I don't want to be poor, but also because it's just a lot of pain for people. There's a lot of emotion that's involved in going through this process. People have been looking at homes for months. I got people looking at homes for years. You tell them, hey, sorry, you finally crapped out. You rolled a bankrupt on Wheel of Fortune. You're done. That's not fun. I don't want to have to tell anybody that. So I'm rooting for lower interest rates. I'm rooting for the Fed to step in here. You're supposed to still be buying these. Get in there and buy. Do what you're supposed to do. Manage the situation. We know rates need to go up. We know rates are going up. Fine. But don't just tie a rock to us and throw us in a lake. Come on. Come on. All right, that's it. I got to make calls, guys. Have a great day. I'm sorry I'm not chipper today. I'm not Mr. Chipper today. I'm trying to help people save money on their home loans, and they're making it tough on me. It's my only goal is try to keep it cheap to own your home as cheap as possible. Give me a call or text if you want to get a rate quote or get pre-approved for a home loan. And you can email me too. How about that? I promise I will be nice. All right, have a great day, guys. Take care.